Hello, you're welcome to this episode. This episode, I'm going to be talking about how to grow your trading account consistently. How to grow your trading account consistently. Okay, so I'm going to give you some steps, the six plan of how to grow your trading account consistently. Number one plan. The first one is to keep up with other markets. Most traders, what they do, they just focus on forex, but other markets are interrelated. Stocks are interrelated with whatever that is happening in stock market has a chance of affecting the forex market. Whatever is happening in the energy market has a chance of affecting the forex market. Whatever is happening in the bond market has a chance of affecting the forex market. So markets are somehow interrelated. So you need to keep up with other market. What is happening in the other market? Because what really drives the market is fundamental. Like currently we are experiencing a trade war between China and the America. Okay, America and China trade war is serious, so it might not be have a direct impact in forex market, but it might be having direct impact in stock market and other commodity, and by that way it will flow into the forex market also. So you need to keep up with other market, because your analysis might be right, everything might be set up, and maybe an event will just come up which you don't plan for the event. It will affect your account. So by that, your account not be growing very fast. So you need to keep up with the bond market, keep on with the stock market, know the stock market, the energy market, the commodity market, know what is going on. At least have some a review on them on daily basis or some time. Okay. The second tip is apply a strict risk management to your trade. Apply a strict management to your account, because that's like someone said, a stop loss is a protective order. That's what can protect your accounts, because the more you are staying alive in the market, the more you have a chance or opportunity to make money in the market. Because if you don't have an active account, what will happen? You might not be able to trade again. You will get discouraged, and you might give up in the market. So what you need to do is, every time you want to enter a trade, you use a stop loss, use risk to reward management, use money management. Money management is very, very, very important. Someone say, if you are not using money management, that means you want to die. If you are not using stop loss, you want to die. Because stop loss is a protecting others. Just like the trend is your friend, a stop loss is your friend. So a stop loss is not just, when we are talking about stop loss, religiously people just play stop loss. Your stop loss should be calculated. Okay, depending on the amount of pips that you know that if the market is this certain place, I'm wrong. It's a wrong or right game here. So you need to understand that. So you need to use a strict money management by understanding your stop loss, your lot size, understand your money management. How much are you going to be risking on a particular trade? Is very important. Okay. Then the another thing, after making the money and you want to grow your account consistently, you also need to watch out for your broker. Number 3 is broker. What kind of broker are you using? Okay, there are so many brokers coming up. Most of them, your money might not be safe with them, or most of them are market makers. You understand? They will want to play game with your funds. Is your fund safe? So you need to take time and study the broker very well. Is the broker regulated? Okay, is the broker an ECN broker or a standard broker that you trust? Your money is good. When you place withdrawal, they can pay you. They are not playing prank with your money. You understand? So you need to take time to take research on the broker, because it will affect how your account grows. Okay, there's someone that was complaining to a trader that was complaining to me that each time he plays a trade, the broker stop him out. Okay, by that is affecting the growth of his account. So you need to know which of the broker you are using. The broker, you need to make a research. You need to make a research which of the broker deserve your money. Okay, so the number 4, study your previous market. Studying your previous market or previous trade. Okay, that is where how to keep journal will help you here. So if you are keeping journals in your trade, if you are keeping journal of your trade, every trade you enter, you write it down, you give a reason why it worked out fine, give a reason why it didn't work out time. Okay, it will help you to have consistent growth in your account in such a way that you study the previous trade. Okay, so as you are studying the previous trade, what happened? Consciously you are having a pattern or certain trade that are good. Certain trade that if you make a right decision on them, it does what? It come out fine. It gives you a good outcome. So you need to look at those trade. Look at your previous trade. They are your personal coach. Through your journal, you must have a trade journal. So if you have a trade journal, you look at your trade. The number 5 is stop comparing yourself with external mark or external factor, like external mark. For example, you have a friend that is a trader and is making like 20% or 50% of 100% of your account. You are just making 5%, but you are not feeling uncomfortable. That's not healthy for your account, because it will lead to you taking huge risks. Okay, remember, you are working on your system, you're working on your trading system. So what you need to do is to stop comparing yourself with other external mark like S&P. Some people, okay, my goal is to beat S&P 500. You understand? So, but you need to understand that the S&P 500 is a natural market. It moves on its own. Sometimes it might just be going depending on certain factors that boom, the market start going up. So you need to understand that you compare yourself with yourself, not external factor. So stop comparing yourself with other trader and also comparing yourself with external market. Okay, let me give you for example. If you have a chance of having an internal comparison and external comparison, which one will you like to take? I believe you should take internal comparison, because as you compare yourself internally, compare yourself with yourself, you can know your mark and start building from there. Gradually you are building. Is a building block. You're building yourself. Gradually you're improving on your skills, you're improving on your results, and you know that this is the pattern that I move. Okay, so you be, then you do, then you have. Okay, so I believe you should pick the internal comparison. The last one is how to manage the money after trading, after you've grown the money consistently. How do you manage the money? That means when did you withdraw? What's the proper thing to do to withdraw? So I put it this way: just withdraw parts of your profit and leave parts in the account for compounding effect. Remember, compounding effect or compounding power is the 8 wonders of the world. Okay, so the more profit you have, the more you increase your loss side, the more money you make in the market. Your money begin to work for you. Do you know why? The reason why the rich are getting richer? Because they have money that they can build on. Do you understand? So it's not when you start making some money in your account, you now start withdrawing the money and buying some frugal things. You start buying things that are not necessary. Okay, delay gratification is one of the principle of accumulating wealth. Okay, you give your money time. Okay, give it time. Let the account grow. Give your account time. So after you build your account, suddenly you know that this account has grown to a certain level. You can now decide to reward yourself. So it's very important to give your account time. It's very important to grow your money. Don't just make profit and quickly withdraw the profits. If you have a system, there's a chance that it's not like you'll be confident that money in your account will grow better than giving the money to someone else just because you need one product or service, in which it might not be necessary. Maybe buying more clothes, you understand, just to show up, or buying things that it's not necessary. Okay, so you need at the start, build your account, let it go and over again. So if you build your account to certain, let the power of compounding effects act on it, and let's just have a principle of delayed gratification. Okay, with this you can consistently build your account. You have a progressive growth or even exponential growth. If you Google the chart of how Warren Buffett starts his investment career, you'll see that at a certain level it was an exponential growth. He has a linear growth at a certain level, but at his late age, at like a few 10 years from now, it was an expression. When he entered into the millions, it was millions of millions, but before he entered billions. Do you understand? So that's how to accumulate with wealth over time, building your trading accounts. Okay, so look at the comment box below and put a comment how to build a consistent trading. What other principle, what other tips do you have for building a consistent profit in your account? Okay, before that, I'll see you in the next episode. Sign out, Austin.